Holly Signorelli here, and this is Ask Holly. And I hope you downloaded my new app. It's free, The Money Therapist. So you can get information on the IRS, tax planning, balance, boundaries, relationship issues when it comes to money. Which brings me to today's topic. We've talked about it before, but I'm going to go over it on the board this time, and that is the dreaded joint bank account. And also, it kind of comes in conjunction with this, is paying for personal stuff out of your business. What happens when people pay for stuff out of their business is they have this money over here, and they're spending personal stuff from it, and then instead of transferring it over to their personal bank account. And what happens is then business owners lose track of what their true profit is. They might have this in their bank account at the end of the year, but that's because they pay for personal things out of the company, so they still have taxable income, and then it comes as quite a surprise to them how much they owe. So it's really, really important to move that money from your business to your personal so that you're more aware of what you're spending, okay? And then you'll be able to do your tax planning better with your CPA because you'll have a better idea of what's going on here. Now, let's get to the joint bank account. And I think this is really, really important, because this is what causes a lot of couples to fight about money. And even if you have a good marriage or a good relationship, when you do fight, you probably are talking about money. And this issue comes up all the time. If you're going to have a joint bank account, I recommend that you each have your own bank account. Hope you guys can see that okay. And that you each contribute to the joint bank account. I recommend that this joint bank account is only for the most basic expenses in your household. Your mortgage or rent, your utilities, cable bill, just those basic 5 or 6 bills that you have every month. And how much each of you put into this joint account is really going to be up to you. If you have one person, if that's the breadwinner of the family or the relationship, maybe they're the ones contributing to that account. Or maybe you guys are contributing in proportion to your income. Because we do live in a different time now. A lot of women are the breadwinners nowadays. Up to 42% is what I see on the statistics. And I have a lot of female clients that are the breadwinners. So whoever is the breadwinner, maybe they put more in, or maybe your agreement is that you each put the same amount in. A really simple example would be that you're each putting maybe $2,000. It really depends on the budget that you have. But if each person's putting the same amount into the joint account and only the joint bills are being paid out of there, then guess what's going to happen? 99% of the time, you're not going to be fighting about money. Because when people are fighting about the luxury items and spending money that the other person has, it's usually because they don't feel like they're contributing equally. So try this if you're having any kind of money problems at home and arguing about money or feeling like things are unfair, and I think you'll be really happy with the result. Everybody, have a great Monday.